Okay, this is the weekly economic and market update for the week ending June 24th, 2022, and also a look into next week, June 27th. So, starting out, the three things I'm going to cover first of all, my personal sentiment. The second is some market and economic indicators that I'm following this week that will influence what happens next week. And then I'm going to talk about what I call the pendulum that's coming up. It kind of puts all this stuff together, and I'll be speaking to it as we move forward. So, my personal sentiment, first part here, is short term, midterm. I am back to 65% bullish, 35% bearish, 0% neutral. Um, Changed quite a bit this week with regards to what happened, which we'll look at here in a little bit. The 10-year Treasury, it started to go back up again to around, I think, 3.3%, and then now it's backed off below that 3.25% number that I kind of keep an eye on. As long as it's below there, my sentiment remains high. I still expect, now nothing's a straight line, but I still expect that the 10-year will continue to drop um, as time goes by. And that's my hope anyway. If it goes up, then I have to rethink what my philosophy here is on the market and the economy. Long term, I'm still 100% bearish. I do believe that things are going to fall apart, and I'll talk to that here when I talk about what I mentioned as the pendulum. So let's start into some of these things. If that's my sentiment, what is everybody else thinking? Well, as I've gone through this in previous weeks, the AAII Investor Sentiment Survey, it actually even went down. We got 18.2% bullish, 22% neutral, 59% bearish. And that's, reflects one of the, I'm going to say, in the 5% range of some of the most bearish market or least bullish market sentiments that we've seen in this survey. And so for me, a contrarian investor, I get a little bit more greedy, I guess might be the term, around what's going to happen in the marketplace. Now, let's look at that 10-year Treasury I was talking about. You can see it started the week back here. Ooh, that's even back further than that. It started the week at about 3.23%. It's backed off a tenth of a percent to close out the week. We got a little upturn here on today. It went back up a little bit. I'm not too concerned again. My 3.25% barrier, as long as it stays below that, I feel pretty comfortable with my bullish mentality. And where I believe things are going, it's in line with that. The GDP, which I haven't really talked about too much, other than the first quarter of 2022 GDP was negative 1.5%, I believe, and so now the estimates started rolling in from the Atlanta Fed on GDP growth, and you can kind of see that back in April they were anticipating 1.9, went all the way up to look like 2.5%, and now their estimate for the second quarter is down to 0. Now, if that goes negative, and it may not go negative when they report it in July, but it may get adjusted later to negative. We get 2 quarters of negative GDP. It's the operational definition of a recession. Now, not too many people are feeling that right now, but just wait. That's coming. We also, I introduced for the first time, I think, in the weekly report, is the US dollar. And I'll be talking about that a little bit more. You can see it's down a little bit today to 3.2%. are down 32 cents, excuse me. And let's see what it did this week. Yeah, it stayed, came down a little bit. Started the week at 104.70. It's now at 104.11. Again, this is something I will keep an eye on as we move forward. May report on it. This particular on this in this particular weekly economic and market update. It impacts a lot of things. As it goes down, we have to pay more for goods and services that we accumulate. A lot of people have rushed to the U.S. dollar because of Ukraine, that whole thing. That's a flight to safety, and the $104.11 I anticipate to go down, probably at least into the 90s, maybe the 80s, here in the upcoming months. But it could shoot up too. I mean, there are some theories out there. There's a guy named Brent Johnson is anticipating that it has something called the milkshake theory, and he is kind of an advocate about, or his philosophy is, or theory is, that the U.S. dollar is going to have a melt up, and I think it will, but not yet. I think it's going to go down right now. That means we'll have to, as it goes down, we'll have to pay for more for things, but it's something that we want to keep an eye on. The next thing I just want to make mention of, it was a good week finally on the markets, and just looking at the SPY, you can see that it closed pretty close to 390. I think it was over it for a little bit there at the end. You can see after hours it's down almost $1, but it was up $11.50 here on the day. 389.94 was the close, up $11.50. It's pretty big move. 3% in a major indice like that is something to talk about. And that's just in one day. I mean, for the week, boy, we had a pretty good week in general. For the last 5 days, looking at, started the week at what, roughly, can't get it right on it. 367 to roughly 390 in 1 week. That's a pretty good move in the market. And whether this stays or not, I'm not sure. I think we may have one more. This may keep going up a little bit more here in the short term. Short term, and for this definition, meaning the next week or two. And then after that, we may have one more leg down before we get a melt up. And I get this melt up idea from David Hunter, which I'll be doing an episode on, so you can become familiar with some of his forecasts and why I follow him. I mean, he's got a pretty good record. Nobody's perfect. He's a forecaster, not a stock trader. So that frustrates a lot of people on Twitter, and so he gets a lot of negative comments. So transitioning to the third part here, kind of a summary of all this and where I think things are going. I think we're in the midst of a pendulum, meaning that right now we have inflation, and everybody's freaking out over inflation. And what's happening is, with the 10-year Treasury that went up to almost 3.5%, we've got oil starting to come down. You got people backing off buying things. Prices at the pump should start to come down here. We're going to hit, for lack of a better term, a euphoria. We're going to hit a bottom here. And once we get to the bottom of the inflation problem, there's going to be relatively still low unemployment. We're starting to see some layoffs, some weakness in the economy. And my opinion is the economy has been weak and has been for a decade and a half, but that's a whole nother episode. You're going to see lower inflation. That's going to get people kind of propped up and ready to invest. And the Fed is going to do at about face. because there is weakness in the economy, and we're just going to hit this euphoria period. David Hunter has put it at 3 to 6 months. I have no idea how long it'll last. Maybe it'll last, you know, years, but I doubt it. But I anticipate we're going to hit this period of euphoria, and then that's when the rug's going to get pulled out from underneath us. We're going to have a deflationary bust. I've talked about this for probably 2 years on my Facebook account, maybe even 3. Anticipating coming, and I'm early because the people that I follow in the Austrian economic world are early. Primarily Peter Schiff. He's been talking about this bust coming for a while, but he's unfortunately going to get his wish. Would be my anticipation. We're going to get this deflationary bust where the bottom comes out of the markets, looking for 80, maybe even 90%. Down from whatever highs we get to in the melt up in this euphoria period, and then we're going to have hyperinflation. We're going to have first of all, starting with the stagflation, where employment's going to start to go up during the deflationary period. Companies are going to cut people. It's it's going to be an ugly time period, and there aren't too many flights to safety to that during that time period. Maybe the U.S. dollar, maybe treasuries. Some people have talked about that are anticipating this happening. Gold, precious metals will go down during that time period, so it may be a good period to either be in cash or some of the things that I've talked about. And again, I'm not a financial advisor, so run this past your financial. If you're your own study, things like the back spreads that I have videos on, and the straddle type as if the market melts up, the price of getting in comes down, and will actually be a better time to run a straddle at that point. So those are potential tools that people educate yourself. If you're not familiar with options, you got a long road and you got some experience to get, but it's something that you can benefit from the downside, but cash is as good as anything, waiting for the bust to come. We'll see how this melt up plays out. If it does, I anticipate it will. And then, like I said, let's just take one thing at a time here. We'll go through this period of euphoria that I'm anticipating over the next weeks and months, up to I'm going to say the end of the year. And then, look out below, I guess. So that's this week's economic and market update. And remember, there is always a better way.